Hey everyone, Dalton Grados with Grados Capital here. Wanted to make a quick video to kind of wrap up 2020. Today is December 23rd, and market closes early on Thursday. We're closed for Christmas, obviously, and another short week next week. So we're kind of wrapping up the year, gearing up for 2021. And I wanted to start off this video by sharing an interesting post from this Facebook group I'm a part of. That's an options trading group. It's called Tasty Trade Options. If you're interested in joining, it's just a free Facebook group. A lot of really intelligent people in that group because this group specializes in some complex option strategies, which so naturally most of the people in the group are very intelligent and do a lot of their research here. So somebody posted this, and I thought it was an interesting sort of summary to what a year 2020 has been for the market. Very volatile, lots of high highs and low lows, and this illustrates it. He says, this is by Glenn Milan in that group, so shout out to Glenn. He did a historical study on the parameters of basically what percentages the S&P 500 index has gapped since January 1st, 1928. So since before the Great Depression, what percentage of the time has the S&P gapped up over 1.5% on the open? So that's the opening bell. How often have we gapped up 1.5% on the index? The answer is 2.942% of the time the S&P has gapped up by 1.5% or more. 687 times in the last 23,354 days. This has occurred 18 times in the past 50 years. Okay? Of those 18 times, 16 of them occurred in 2020. There was one in 2008 and one in 2018. So, of all of the times the S&P gapped up 1.5% at the open, since 1928, 16 out of 18 of those occurrences happened in 2020. Since January 1st, 1928, what percentage of the time has the S&P gapped down over 2% on the open? The answer, 2.017% of the time. The S&P gapped down by 2% or more 471 times in the last 23,354 days. This has occurred 11 times in the last 50 years. Of those 11 times, 10 of them occurred in 2020. The other was in 1974. So in 2020, we had the market gap up 1.5% at the open 16 times, and we had gap down 2% at the open 10 times in 2020 out of 11 total in history. So, it's been quite a year for the stock market. Most of this year has been a very news-based market with everything going on in the world between the virus and the stimulus and, everything, the election. So, if you are a trader and you are still trading and you have made it through this year, let me say congratulations. Just to share my personal trading story, I started trading this year in April. And was it the worst time to start learning how to trade? Well, maybe in a sense that I did lose a lot of money. I have lost money. I'm a consistent trader now, but I've paid my dues to the market. But I think this year was probably the best opportunity to learn, because if you've made it this far and you've traded this year, you had to learn risk management really quick. Because, if there's been days where literally the market, like this data shows, drops 2% on a dime. So we've learned risk management, and I think I personally have become a very disciplined, conservative trader. And now I'm at the point where I've found my style of trading that works very well for me with some of the more complex option strategies and collecting premium. And with that strategy, actually, over the past couple months, I have yet to have had a losing trade, if you can imagine that. Because with credit spreads, it doesn't matter where the stock goes necessarily. It matters just that it doesn't go to this certain point and I make money every time. It's like I'm an insurance company. I make money every time unless a tragedy happens. So that's how I've structured my trading. That's how I will continue to trade moving forward. And what's really nice about once you can find consistency in your trading style, everyone's going to be different. Some people are going to be swing traders, some people are going to be scalpers, some people are going to do complex strategies like me. Everyone's going to be different, but once you can find something that you like, that works for you, that gets you consistent wins, you're going to have occasional losses, of course, but consistently winning, then the compounding effect starts to take place. And that's the position that I'm in now as we're ending 2020 and heading into 2021. 2021 is going to be the year for Grados Capital. And I look forward to beefing up the content here on the channel and investing more as I make more, investing more into the production of these videos. But once you get consistent, the compounding effect starts to take place. So I'm in a position now where, okay, we're making $1,000 a week. Not too long, maybe a couple months from now, we're making 3, 5, 10. I would see even next year, 10 grand a month, not a month, a week, 20 grand a week. All of a sudden, we're making $1 million a year, and it's like, how did we get here? Well, it's just we found a way to be consistent, and we let those gains compound over time. Now, of course, we're going to splice the deck and add into the savings account, add into the long-term portfolios, building some positions, maybe even investing in some real estate, just to diversify. But ultimately, we're going to be compounding that trading account that's going to consistently win over time. And I'm excited. I'm excited to see where we go, and for you guys to join me on this journey and to see the future of where I take Grados Capital. So, in summary, 2020 has been quite a heck of a year. It's been a great year to learn how to trade. And now, if you can get consistent in this market, then you'll be set for life. I truly believe that. Based on this data that I just shared with you, the 2020 has been probably the most volatile year in history. So, if you can survive here, you will thrive for the rest of your life, because we're building skills that will cause us to ultimately be able to create unlimited wealth for ourselves. As far as the market moving forward in the short term, we've had a bit of an issue with the stimulus going through, but it hasn't affected the market as much because Trump came out and he said he's like, I don't like this stimulus bill. There's a lot of BS in it. But then he came out and said, I'm actually advocating for more stimulus for the people, $2,000 checks instead of $600 checks. So the market is kind of rallying off that. Even though we're denying the stimulus, we're actually saying we need more. And then Pelosi agreed. Trump and Pelosi agreeing. It's like a Christmas miracle, right? So I am bullish on the market moving forward, and I will continue to monitor it as needed. Again, with the strategies I'm doing, I'm playing it pretty safe, and so it doesn't really matter. I can give the market some leeway and still make money off of these strategies I'm employing. So that's my outlook moving forward, and a little wrap up to 2020. Merry Christmas to everyone out there, and see you again in 2021.